Suppose you own 21.22 shares in VTSAX and the payout per share is $0.04 as the company has declared, and you get the final payout to be $9.34. But this is before tax. So how are VTSAX dividends taxed? You have to check your form to know how much of each type you have received. Qualified dividends are taxed at lower long-term capital gain rates. You're talking about 0%, 15%, 20%, depending on your income level. And to be qualified, there are two criteria they must meet, okay? The dividend must come from a US corporation and you must meet the holding period rule, okay? So you must hold the shares for at least 61 days during the 121-day window, okay? Then we have the ordinary or non-qualified. These ones are taxed as ordinary income at your regular federal income tax rate, which can range from 10% up to 37%, okay? Depending on your tax bracket. So the next step is to know how much will be taxed under the qualified and how much under the non-qualified. So to get that, you will do this 9.34 times the 95%. That will be 9.34 times 0.95. You get 8.87, okay? Then for this one, you'll do 9.34 times 0.05. You get 0.47. So assume you fall under the qualified dividend rate of 15%, okay? Remember the qualified and the non-qualified or ordinary. So to come and calculate the tax on the qualified, it will be the 8.87 times 0.15, which you get 1.33. Then the tax on the non-qualified, this other side, okay, it will be 0.47 times 0.24, which will give you 0.11. So the total tax will be, you add the two, the amount that will get to your settlement account will be the 9.34 minus 1.44, okay? The total tax, which you get 7.90, and that is in dollars.